Hey everybody, how we doing out there? Doc Severson with you here at Trade School at ReadySetCrypto for Thursday, the 3rd of January. Happy New Year to everybody out there. Hope you're having a good year so far. It's hard not to. There's only a couple of days underway. How's everybody doing? Hello. Wave to you guys right now. We've got something I'm going to talk about here today. Don't do anything silly, first of all. And the question on the table is, should you make New Year's resolutions or should you just make goals for the year? Now, I'm going to bring up some slightly different material that a lot of people are going to find a little bit odd at first. Quite honestly, because I've gone to a different source. I've actually gone to a cartoonist for inspiration today. And I'm going to bring up some things that maybe you hadn't thought about, or maybe you're going to think about them differently. Okay, so this is the time of year where everybody sets up New Year's resolutions and goals and says, well, to hell with 2018, I'm going to do everything totally different this year. Okay, well, let's talk about how you should do that. First of all, let's do a current state. Let's talk about how we currently plan things. How do we go about the process of planning? All right, looks like we got a lively bunch that's out there today. Good to see you guys on board. So how do we currently plan at the beginning of the year? So this is, I've talked to hundreds of traders over the past decade. So I think I have a pretty good idea how we approach planning for the new year. And I'm certainly not exempt from this as well, too, before I was enlightened. So first off, I can't think of anybody that's really happy with last year's performance. And this seems to be like every year. No matter how good the year was, even at the end of 2017, a lot of people are like, I could have done so much better. So we're not sure that we want to look at the numbers as it brings up painful memories. We just this is the way the subconscious mind operates, is it will focus on the negatives. It'll focus on the big one that got away. It'll focus on the one where you took a loss. It won't think about the one where you effortlessly or maybe subconsciously by accident made a profit, because your subconscious mind realizes that you had nothing to do with that. But it will focus on the stuff that you got wrong. So the issue, we come to do a little troubleshooting and we say, you know what? This is the year I want to do something new. I want to try a new strategy. That's got to be what the problem is. So that's the plan for the new year. Learn a new strategy because, well, the old one has got to be defective, right? If we're not getting the results we want, it must be the strategy. So we get that initial rush of passion for this new strategy, and then this is going to be the one that puts us over the top. I mean, I still get this to this day. I mean, I am not immune from this sort of thing. Like when I learn about some kind of new technique or some kind of different way of doing things, I get just as excited as day one, right? This is very, very normal. If you don't get this way, it's going to be tough to find that rage to master. So you learn about this new strategy. Maybe you make some kind of investment into it. Well, so eventually what you'll do is you'll take a couple of trades in and out, in and out. Not surprisingly, they don't produce profits. It is very, very common for you the first time through not to be able to have an edge on the trade because you're trading not to lose instead of trading to win, or there's many, many other reasons. Maybe your subconscious mind realizes you had nothing to do with it. And so the old subconscious mind says, oh no, we suck again. So the problem must be that we picked up the wrong strategy, right? So this is the very first logical assumption many of us make, is that, well, it must be the strategy, it must be the guru, it must be just something wrong with it. Can't be us. So we're confusing the symptom here as the root cause. And this is one thing I had to learn over time. And I mean, my background, my background in technology, when I was fairly new at this, I would get into troubleshooting and I would be jumping all over the place with every symptom that I saw. Oh, that's got to be it. And we'd run over like a herd and try to fix that problem. Well, it was just a symptom. It's kind of like, a cough to a cold. So understanding how to find the root cause has become more of, as I've gotten more involved in things like this, finding the root cause is really important. So our approach is kind of faulty here if we're just doing that, if we're just bouncing around between strategies. This is no different from our craze with setting New Year's resolutions. So I'm not sure how Europe does this, or Asia does this, or South America, or whatever. We Americans have this craze for setting New Year's resolutions. This is what we do. At the beginning of every year, we say, I resolve to do the following. So 45% of Americans usually make New Year's resolutions. And probably 99% of those 45% post them on Facebook. Only 8% of them are successful at achieving them. So think about that for a second. So the 8%, think about what a very small slice of life that represents, because if only 45% are doing this, only 8% of them are actually successful. So we're talking about something on the order of, 4% or so that are actually, across the population, are actually achieving some form of goal that they set up as a New Year's resolution. The majority of us break our resolutions by January 12th. Oh, I'm going to sign up for a health club. I'm going to start working out. By January 12th, can't get out of bed. Oh, I think I'll skip tomorrow. I'll come back on Wednesday. That kind of thing. So chances are traders fall into the same statistical grouping. So if 45% of y'all are making goals, that implies that 55% are not even trying to set goals for the new year. And that's probably not far off the mark. Here's one of those things you don't want to read, but it's got to be true. Those that don't set goals have a 0% chance of achieving them, right? No chance. So it's clear that most people's approach to achievement is flawed. Let's start by crushing an old myth, and this is where it's going to perhaps be a little bit difficult for you here. Goals are for losers. Now, this is not something that I said, but I merely copied somebody else saying this, but I've kind of adopted this mantra in a way, and you'll see why in a minute. The problem with goals is that we're running off of passion, which is a short-term source of energy. So you get inspired by something, but guess what? Inspiration is kind of like a soft drink. It's that sugar rush, right? It sparkles and then it flames out because all of a sudden the hard work comes into play and you're like, oh, well, this is not fun anymore. I don't like this. I want to do something else. Okay. Candy bar, short rush, we crash after that. So what we need is longer term energy to sustain us, right? We need that big old CHOP index value. How do we create a longer term method of sustaining effort and energy that doesn't fade in a day? What can we do to have us maintain this? And again, you can't just maintain inspiration and passion every single day of your life. You'd be Richard Simmons. So this is where Scott Adams, the creator of Dilbert, I want to introduce you to Scott Adams. Perhaps this is a side of Scott Adams that you did not, or you were not aware of. I don't know how American this is. I don't know if this translates over to any of the other continents out there. I don't know if he's on national or international distribution. But Dilbert is the cartoon that's been in play for probably 20 years now at least, and is about a typical engineer, right, working at a typical tech company and all the bureaucratic BS that they run into from day to day. So it's a very very witty comic. It's been around for a while. So hopefully you guys have seen this before, but Scott Adams has actually gotten himself into the more of the attention lately, as he's made some very key predictions over the last few years that have surprised a lot of people. And so a lot of people are starting to take notice of Scott Adams as like some guy that really gets it. He's really aware of what's going on. And so I did read this book a year or two ago, and it's actually very good. How to Fail at Almost Everything and Still Win Big. Very interesting book, very easy to read, and something that I would recommend as well too. Yeah, Tig, I don't know how old the Richard Simmons reference is. Maybe I should update my references. Probably not too many people remember him anymore. But so anyway, so Scott Adams is actually more than just a famous cartoonist. He's able to see through conventional wisdom and see smarter alternatives, and something that I quite admire. Also, you guys might want to check, besides his book, you might want to check his Twitter feed. He does live periscopes from time to time where you just, all of a sudden you're in his living room just talking to Scott Adams. It's kind of interesting. And he does have a very good blog out there. So here's his case. So bear with me a minute. Goals are for losers, according to Scott Adams. If your goal is to lose 10 pounds, and everybody's got some kind of weight-related goal, if your goal is to lose 10 pounds, you will spend every moment up to that point feeling as if you are short of your goal. You're gonna feel like a loser, like, oh no, I can't get this. So goal-oriented people exist in a state of nearly continuous failure that they hope will be temporarily. So you're going through this, well, I'm trying to lose 10 pounds, but I'm not there yet. I'm still a failure, right? I'm still a loser. I still am not there yet. So the feeling does tend to wear on you, becoming heavy and uncomfortable. I'm not there yet. I'm not there yet. I'm not there yet. Or think about if you want to be a profitable trader, it's the same thing, right? If you achieve your goal, you just lost the one thing that was giving you purpose in life. You're driving towards that, living in this state of continuous failure, and finally, all of a sudden, you achieve it. And now what? Now what do you do? All of a sudden, the thing that was giving you purpose is gone. This is why so many goal-oriented diets bounce and fail. Substitute the word diets for any noun that's in there, any accomplishment that you're trying to go after. Could be profits. It could be anything related to your business. But goal-oriented things tend to give you short-term results, and then long-term, it's gone. It's bounce and fail. How often does this happen? Here's what he's providing or suggesting here is that systems are for winners. And this is what's cool about the book, is that he shows you how, instead of, he kind of came to this realization that, look, goals are no good. They're just short-term candy. But systems are where it really does work. So systems are for winners. So for weight loss, think of people that have made a lifestyle change. You've heard of this before. This is a system, not a temporary goal. These are people that have committed to saying, look, I'm in this for the long term. I don't have some kind of short-term goal. I'm just going to change my lifestyle. The odds are much higher that this system of lifestyle change will produce great and long-lasting results if you commit to it. And we can have all kinds of analogies here. Warren Buffett with a system of buying undervalued companies versus the typical retail investor with a buy and hope or hodl mentality that doesn't have a plan. Here's some example goals for systems. Going to the gym 3 to 4 times a week is a goal. I'm going to go to the gym 3 or 4 times a week. That's a goal. But this is hard if you don't enjoy exercise, especially if you overdo it trying to catch up, right? So, oh, I missed a day, so therefore I have to catch up. Eventually, what you end up doing subconsciously is you associate discomfort with exercise and you create excuses to stop. Well, this is just hurting me, right? So compare that goal with a system where you're active every day at a level that feels good. Eventually, your body will be trained like a circus monkey to crave activity. No willpower required. So I've kind of gone through this in my own life a couple of times. Actually, I was at a decision point here recently. I'd say this is back in September, October, where I said, oh, guess what? There's a new Planet Fitness, which is opening up a new gym. They started building a gym, and it's literally a 500-foot walk for me to get there. So I just have to walk in this little path and then boom, it's right there. And it's like, wow, that's going to be great. Think about all the excuses I can cut out of not going to the gym. It's right there. And then I started looking into it. I said, okay, so what is this? So it's $20 a month. Wow, well that's not that bad. I could probably afford that, right? And you start looking at, though, you start doing a little bit of digging. And what I realized was I was going to fall into the same old trap, because through my life, I've done that kind of thing. I've gone into a gym, I've signed up for a gym, go in there, do a couple of exercises, and then go soak in a hot tub for an hour. Yeah, that's great. But it doesn't really do anything. It doesn't really help. So you end up feeling good about something, but then ultimately you feel bad because you know that you're just wasting time and money. So I've never been able to really get over the hump on something like that. So what I did instead was I signed up for a system. I went to one of these really hardcore, like animal gym kind of things. It's not quite CrossFit. It is a CrossFit gym, but it's like, I've got a trainer that expects me there 3 days a week at 6 o'clock in the morning, showing me exactly what form to use, telling me exactly what to do, not letting me off the hook. And I have to say, I've become quite addicted to it. So it's a system. I don't have to do anything. I don't have to think about it. I just show up. And what I found is, like, over the holidays, I do have a gym at my complex here, and I go down there and I fall into the same old routines again. I'll go through a couple of motions, and then, you feel a little bit different, and then you leave, and it doesn't really do any good. Systems is what works. So goals do not work when it comes to this. So adopt a system. Behaviors create habits, and then habits create behaviors, and in turn. So change your habits, change your life. This is not the first time that I've said this. Habits is the key to everything. It's the aggregation of marginal gains, a la James Clear. So again, you're starting to hear some of the same things from me using different resources, kind of saying the same thing. They all kind of vector into the same kind of advice, is that you can't, the problem with a lot of us is that we see this mountain that we've got to climb, and that we get all excited by it, and we get inspired, and we see there's somebody up at the top of the mountain, and we say, I want to be that person, and I want to be there today. And then we start walking up that mountain. All of a sudden we realize that there's a big bog and marsh and a swamp before we even get to the base of that mountain. And it's really tough to get through. So a lot of us, this is called The Dip by Seth Godin. And a lot of us give up before we even get to there. We say, this is really hard, and I'm starting to doubt my own real will and want to get up there. There's another mountain over there. I think I'll go after that one. And this is what we all do. Instead of, if we break it down into a system, well, okay, so I'm going to have to get through the marsh, and I'm going to give myself 30 days to get through there. And then as long as I can climb 10 feet a day, I'll keep moving to the top of the mountain. If you break it down into a system, all of a sudden things start to happen in your life. So does it now make sense why your short-term trading goals aren't getting accomplished? We're just bouncing all over the place. You're going from one thing to another. You're setting up goals that don't really do anything. And if you do actually hit your goal, you've taken away your motivation for getting there in the first place. Okay, so we need to create repeatable systems that are easy to maintain. Go figure, an engineer telling you this, right? Don't just set up short-term goals that set us up to fail. So let's swing over to the trading side of things now. Let's talk about creating a trading business system. So again, for those of you that have seen this presentation from me before, or these set of images before, I apologize, but sometimes repetition is the mother of skill. In fact, all the times it is. So yeah, we will set up goals in a system, but we'll frame them in the context of a system. So you do have to start with some type of goal. You have to know where you're going. If you don't know where you're going, how will you know if you ever get there? You have to make some kind of progress towards what you want. So get that light at the end of the tunnel. Keep that light at the end of the tunnel in mind, and just get that vision for this. So again, I think what's important here is don't shoot for perfection. Don't expect to summit on the first day. The aggregation of marginal gains, again, 1% better every day. Just start with something that pulls you towards this number to begin with. Remember the Brett Steenbarger quote that I talk about, which is called getting the rage to master. You must have the rage to master something. If you don't get excited by it, if you don't have any kind of pull towards something, I mean, you can push and push and push. And I see a lot of people that are in the trading world push themselves and push themselves and push themselves. But if you don't have some form of pull, you're losing 50% of your motivation. So start off by identifying what your goals are. So just setting these up alone is not a system. It's just wasted effort. So this is where I see a lot of people that start with goals. They write out their goals at the beginning of the year. And then what do? They stick them up on the shelf and there they stay until next year. And then they say, oh, yeah, I remember writing those last year at this time. So we just do the same thing over and over again and expect different results. Now we're going to employ those goals to the market with rules. So no trading rules, no system. We will naturally end up trading with a retail herd if we can't identify and prosecute edge in the market. This is going to be probably the thing that takes you the longest to learn about trading the markets, is what really makes edge. And edge is actually quite simple. It's going against the great unwashed masses out there. When you go against the herd opinion, typically that's the greatest edge that you're going to have. The trades that feel the worst to place are the ones that will, over time, probably work out for you the best. So keep in mind that your initial rule set is just a starting point. It's just a starting point, regardless of where you got these rules from. This is extremely important, that you have to internalize them. So I don't care if you bought a set of rules from somebody, or if you've got them passed down, or you read them on a YouTube video, or you pulled them out of a book somewhere. That's your starting point. Because if there's one thing I've noticed is that markets change. So especially if you read some strategy, which is 10, 20 years old, it's probably not going to work in today's market. It's just different now. So regardless of whether you got that from the stock market, you're trying to apply that towards crypto, or even something that worked in crypto in 2017, it's not going to work now. We have a different character of market. So that's your starting point for your rules. This set of rules becomes your overall trading plan. This is your trading plan. Now we have to analyze things. Yep. Engineer 101, we have to analyze our results. We can't just sweep them under the rug and just say, I'm just going to look at my good trades because I don't want to look at the bad trades. This is what a lot of people do. They just sweep things under the rug instead of actually using them as something that they can learn from. Actually, the bad trades are the gold. Majority of traders cannot tell you their performance numbers, mostly because they want to move beyond the losing trades. Well, that was in the past. I'm optimistic. I'm thinking forward. Okay, but unless you change something, the results that you get in the past are still going to be the ones that you get going forward, unless there's something different about it. Optimism alone is not going to pull you into better performance. Can you give an example for a rule just to get an idea? Well, an example. So Rajith is asking about an example for a rule. Well, let's break it down in a couple of different ways. So one of the rules that we had one of the rules that was in the trend trading was we're going to look at entering a 20-day high. So perhaps there's something like this where you have a range here with a 20-day high, and all of a sudden you're breaking above that 20-day high. This becomes an entry point. Okay, so that's your entry point, and you have a stop associated with that as well too. There's also money management associated with that, like how much your account are you going to put in. That's part of the rules. So think about the 3 M's of trading according to Alexander Elder. So there's mindset, there's method, and there's money management. So all 3 of those have to operate like a 3-legged step stool. If you're short on one of them, the whole thing falls over. So you've got to have all three elements of that. Okay, so that's just one example. If you're doing something like let's say you're doing a short-term trade, perhaps what you're going to do is you're going to look for the same type of thing. Perhaps you're going to look for maybe, consolidation with high energy, and you're going to look for a breakout. If you want a good example of that, look at Link BTC. So Chainlink had a nice little breakout from this pattern. Big energy as well too. So that's more of a short-term trading strategy, or something that I taught in the fractal energy program. Okay, so that's a rule. I mean, we could go over all kinds of different rules, but that's what a trading rule is like. That reminds me, there was somebody that, what were they saying? Kind of the same thing, like, oh yeah, I remember the question was, it was this morning, somebody said, hey, can you give me an example of how do you exit? How do you exit? Like, we're in a bear market right now and having trouble, because apparently what's happening is that, maybe they'll get a couple of days of movement and then it's getting whack-a-mole again down to the downside, which is just kind of the character of what's going on right now. And they're like, dude, I was up a couple of days and all of a sudden, it's gone. Well, again, you have to define your exit based on your strategy. What is your strategy? Is it trend trading? Is it a longer term trend trading? If that's the case, then your exit is the trailing stop. If it is a swing trade, perhaps you're going to look for average swing length. Perhaps you're going to look for just a 10%, or maybe you're going to split up your position. You're going to peel off 50% of it at a certain resistance level. There's all kinds of ways to do it. And then, of course, if you're just scalping intraday futures, you're just looking for a few points here and there. Get in, get your fair share, get out. So it all depends on exactly what you are trading. Okay, so the strategy, so again, my point here is the majority of traders can't tell you their performance numbers, and mostly because they want to move beyond the losing trades. And actually, that brings up a point here. Somebody brought up edge wonk yesterday. I'm playing around with that. I'll let you guys know what I think about edge wonk here shortly. So, or the strategy or the mentor or the broker was the fault, not them. If you find yourself not taking, Jocko, extreme ownership here with your trades, you are responsible for your trades, not somebody else. In fact, this is one of the things that I ran into when I was first trying to break out of the pack myself. Was I was following a newsletter and I was following their trade, and as soon as I entered, all of a sudden the trade started taking heat. And I emailed them back and said, hey, we're taking heat in this trade. What do we do? Oh, just stay in it. Price has never gone up to that resistance level. 2 days later, the price is still going higher. I should probably give you guys a visual here. So what I was doing was I was setting up an options trade where, as long as the price stayed below this point here, we were good. If it went above this level, that's bad, right? And so this is a stock called Toll Brothers, which is a building. So the price was down here, and as soon as I entered the trade, boom, it started going after it. And so 2 days later, I emailed again and said, it's still going after it. What do we do here? Should we get out of it? What do we do? Nope, stay in it. And then 2 days later, what do you think happened? Boom, right through that level like it didn't even exist. And I'm like, what do we do now? And the reply back to me shocked me. They said, oh, you should have got out of it 2 days ago. And I'm like, oh, you got to be kidding me. So I took a big loss in this trade. This was a huge loss because I had, of course, did the same thing as everybody else did. I was very confident of the trade. It felt great. It was logically perfect for the trade. So what did I do? I loaded up the truck. And this is a huge loss that I had. So that was the worst loss that I'd had up to that point, but it was probably the best thing that ever happened to me. Why? Because I realized these guys had no risk management. They had no way to defend the trade. And it forced me to say, all right, I'm going to solve this problem. I have to learn how to risk manage this type of trade and defend this type of trade. And because of the fact that I took something which was a horrible loss like that and took ownership of it, and I found a way to defend trades like this in a very dynamic way. That's how you get somewhere in this business, is you fix your own problems. You got to do it that way. So tracking your performance is a critical step to creating a system. And then, of course, there's a reason. I say this all the time. Cars have a steering wheel for a reason, you know, except for Teslas, right? Those are, yeah, Mav was driving a Tesla a couple of weeks ago, and it was just fawning about it. Just loved it, the autopilot feature. But, you know, just about everything that we have right now is some type of control surface on it because we have to make course corrections all the time. So this is what you're going to find is that the very first iteration, this is your chance to kind of tune in and vector in on where you want to go. And your ability to take control of this and not just make emotional decisions, but actually analyze what's going on and make it better. This is the magic. This is really the magic part here that makes the biggest difference. This is what I found makes the largest percentage of change to an average everyday retail trader into one that all of a sudden gets it and starts getting edge because they're taking ownership for the trade. And by doing so, they create ownership for it. They internalize the strategy. It ceases becoming somebody else's strategy at this point, and it becomes their strategy once they start to do this. In fact, the whole cycle, once you start to do the whole cycle, is really what it does. But this, to me, is where the magic happens. All right. So for the majority of traders, the corrective cycle means moving to another strategy, right? Oh, well, this thing's terrible. I've lost twice in a row, so there must be this strategy. So I'm going to operate in a corrective manner by trying something else. I would suggest not doing that. I would suggest sticking with it if you can. Okay? So this is the worst possible thing that you could do. And I've talked about this at length before, where I see people do this. They'll invest in a strategy. They'll trade it a couple of times, lose both those trades, and so they go thundering over to here, try a new strategy, trade it a couple of times. That doesn't work, so they just keep trying different things, expecting different results, and you end up being a jack of all trades and a master of none when you do something like this. So it's the worst possible thing that I can. Now, there's nothing wrong with doing a little bit of experimentation, trying to find what works for you, your trade, okay? But you'll never hit mastery when you do that. So losing trades are a gold mine of information if you stop to examine the information, guys. So that assumes, though, that you have rules and that you've tracked your performance and you have identified key criteria to measure. Oh, no, it's time for a facepalm here from Captain Luke Picard. Okay, this is where most people fail. They don't have these pieces. Okay, so most would assume at this point that you're done, right? You've set up goals, rules, you've taken trades, you've measured your performance, you've made corrective steps. You're done, right? Wrong. You got to keep going. Maybe after a cycle, you want to update your goals. Keep going. Your corrections should have identified possible rule tweaks to improve performance based on your analysis. Keep going. Do your new results show that the corrections are making any impact? Are you getting closer to your goals or further away? Are you getting better or worse at this? Keep going. Are there new corrections or tweaks that we need to make based on the new set of results? Always. So if you're running a system, this effort never stops. It never stops. Can you see the difference between a set of New Year's resolutions and a system? So I've showed you kind of the two ends of things here between, hey, I want to be a better trader this year. That's my New Year's resolution. Or my New Year's resolution is, I want to be a profitable trader this year. Okay, good luck with that. Okay, guys, this is the competition we'll be trading against. Okay, so goals are for losers, systems are for winners. Be a winner. There we go. Okay, any questions for you guys? Thanks for letting me ramble on there a little bit. Okay, let me catch up to the chat window here. Okay, let's see. What do we have here? Questions. Bum, bum, bum. Losing trades are a gold mine. You're sitting on a gold mine. Yeah. If you can, this is the hard part, Tig. If you can analyze a losing trade, and in my way of thinking, and I'll write this down because I truly believe this. Every losing trade has a root cause. And I believe there is a root cause that you have control over. So a lot of people say, well, the root cause is the price went against me. I think if you do enough digging and if you understand price behavior enough, you can understand where perhaps you lost track of a time frame or perhaps an anchor chart or something was exhausted and you missed it. If you get enough experience at this, every trade that you take, you will find a root cause for a losing trade. And that's where the magic occurs. That's where you really start to develop as a trader, is that all of a sudden you're really taking ownership for it. So Rajith, do you have any advice for newbie traders? Things to avoid, common mistakes? Well, Rajith, everything that you do is going to be a common mistake. And I don't mean that in a bad way. Right? Don't take that personally, but everything that you do right now is going to be wrong. Why? Because let's go into some of the reasons why newer traders are going to be challenged by this. So first of all, let's see. Let's get a nice little pen over here. Let me count the ways. So right now, newer traders are going to operate based on the news. They're going to read the news and say, well, hey, everything's really bad or everything's really good, so therefore I'm either going to be bullish or bearish. So you're going to operate based on the same level of news points that everybody else has access to. So where's the edge in that? You're not going to have any edge. So what a lot of traders think that they have to do is, I need to get better news. That's it. And that's really not the issue, because guess what? The market's smart enough that it's already priced in your little piece of retail information weeks ago. So something else is, and there's just, I'll call this just trading not to lose. Trading not to lose. Trading not to lose is what kills a lot of traders, because they're waiting for things to feel good. They're waiting for things to feel good. And guess what? If you're waiting for things to feel good, you're going to be trading along with the herd. And all of a sudden, the entire herd is going to have the rug yanked out from underneath them. So you're going to be trading along with everybody else. Let's see. Another good one is, and this is kind of related in the same way, is that most newer traders think that risk equals bad. And it's not. Risk is just risk. You don't get paid unless you take risk. So think about this. I mean, a lot of people come to me and say, well, what's the safest trade that I can possibly make? And I'm look at them and say, certificate of deposit, money market fund. That's what you want to do. Oh, no, I want to make money. Well, you didn't say that. You're looking for something safe. Okay, so you have to take risk to get paid, because that's what you're doing. You're assuming risk for being paid. And so this is where we get into the whole sense of risk management, is that you want to make sure you're not taking too much risk because you're getting greedy. Okay, so risk is not bad. It's what makes markets go. But we have to get over this mindset that we were taught by our loving parents when we were young children, that risk is a bad thing. Don't go outside there. You don't get that look off your face that, right? All those things. So we have to kind of unlearn things that we were taught since we were children to be able to function in the market correctly. So I could probably go on and on and on here, but unfortunately, you're going to have to go through the same process everybody else does. There is no magic elixir. There's no shortcut to being an effective trader. The one thing that you can do, this will cut your development time dramatically. Find your one thing. Okay, find your one thing. So when you are a newer trader, when you're a newbie trader, you're going to be bewildered by all these different strategies and different instruments. And there's, thousands of different cryptos that are out there, and there's different ways to trade them, and there's different brokers, and you just, after a while, you get lost. And so you just bounce from one thing to another because you're trying to find yourself. Pay attention to what's going on out there. Learn, find out, get some exposure, but don't risk any capital. Don't risk capital until you become an expert at that chosen methodology. The people just, that's the first thing that they want to do is they want to get in the market. They want to immediately trade, and they become part of the liquidity pool, unfortunately. Again, if you want to do that, I'm on the other side of that trade from you. It is what it is. It's nothing personal, right? But if you find your one thing, if you narrow down your focus to the tip of the spear, that's where you're going to find the best progress. All of a sudden, if you keep iterating on one thing, if you keep getting better at one thing, this is where the aggregation of marginal gains will have the best effect. Instead of spreading it across 25 different strategies that you're working on in 6 different markets, maybe if you just pick one market and one strategy and then just focus on that. And that's where you will find, if you find your one thing, and many people are still looking for that one thing, but if you find your one thing that really gives you that rage to master, this is where you're going to have the quickest progress. Okay, so, all right. So Rajith, I could go on forever on this one. It's a huge topic. How long, so, hey, Annie, how long paper trading before putting in skin? Okay, so let your numbers tell you the answer to that. So here's what I like to do. And I still do this to this day. If I use the phased approach. So I'll do phase 1. So when I'm learning a new strategy or a new method of trading, I'll do phase 1, phase 2, and then, oh shoot, I've just lost. Okay, let's try this again here. And bear with me here if I just do P1, P2, P3, all right? Phase 1, phase 2, phase 3. And I'll try not to hit that same button that I did before. Okay, so in phase 1, what you're doing is you're trying to find edge. You're trying to find edge. And you're doing this on paper. This is what I would recommend, is doing it on paper, because you're just trying to find out whether or not the strategy is any good and whether you can tune it. So this is where I will do probably, and these are usually shorter term trades. These are usually not something longer term. Longer term, you just don't get enough practice in doing this. So you can almost do a little bit of back testing if you want to. But first of all, find the edge, do it on paper. And I would do something like at least 30 iterations. Okay. And so after 30 iterations, if I can't get this thing to be profitable, if I don't have at least a positive profit factor and a decent win rate at something like this, then it's going to take longer than that, and I may lose patience with it. There's other things to work on. But usually if I can find something and if I can get profitable at it within 30 iterations, then I may go on to phase 2. Phase 2 is where I will go, and what I'll do to graduate, to get up to this level to phase 2, is I will say, a lot of times I'll do like 50 iterations, and I will say last 20 have to have at least this profit factor and at least this win rate. You know, I want a certain expectancy out of that before I go live. Now, if I go live with this, I'm going to go with just one contract or something. And if it's using something like a spot currency where you can't trade it in terms of contracts, you guys will get into contracts as we get into futures, and that'll be happening this year, as a matter of fact, especially if we get into Digitex. So something like a minimum contract, imagine that like a one contract position in Digitex is going to be worth 5 cents, right? So 5 cents per tick, big deal, right? Minimum size. So we'll go with one contract, and my goal is to duplicate these results. Duplicate those results. So normally there's a little bit of a drop off when you go from paper because you don't care about it, right? Oh, let's just put a trade on and we don't care. And then we go to live capital and all of a sudden we take a little bit more of an interest and we're a little bit more protective, even though maybe at a minimum contract size here, it may not be that big of a deal. But the point is that we have to be able to do this with live money, even if it's a minimum position size, duplicate those results. And P3 is, I would say we're going into, I won't say this is full position size, but this is, I'll just call this normal risk. So this is true like production trading, right? So again, I have to graduate to get up to there. Same thing, last 20, above a certain profit factor, above a certain win rate. And then I can go to multiple contracts or bigger position size, whatever I want to do. But that's part of your business plan. Put that in your business plan and tell yourself, look, for me to graduate to live capital, it's not a feeling. It's not a, oh, there goes the market. I better get on board now because otherwise this is going to run away without me. Earn the right to trade live capital. Earn the right to trade live capital. Okay, any other questions? Which time zones are fibs most useful for success? I don't really understand that question. Fibs are used for price retracements. So if there's somebody out there that's using fibs in a certain time zone, I'm not aware of that. And perhaps that's somebody that you should follow. Since the tick size is 5, well, I'm saying that the tick size is 1 tick in Digitex. So Digitex, again, is going to be, and I'm going to make this just real simple here. Just going to, you know, like a regular ladder or dome is going to look something like this. Okay, so regular ladder or dome is going to look something like this. So here's the bid. Here's the ask. If you want to go long on something, you click on this side. But what we'll see is that each one of these is going to be 1 tick value. And so this will be like BTC. Let's say, what is BTC right now? It is, hold on. So this is, say, like 38.19. I'm sorry, 39.18. So it'd be 39.18, 39, 19. All right, bear with me. 39.20. All right, so each one of these represents a price tick. So right now with one contract, if the price moves from, if you go long, if the price moves from here to here, the position will increment one tick, and that is worth 5 cents, right? Whatever, for one contract position, it's only going to increment in value by 5 cents because that's how much a Digitex token is worth. Oh, so Ann's talking about time frames. So, all right. So time frame is a time frame. So we need to put the emphasis on the right syllable. So time frames are like a 5-minute chart, 10-minute chart. Well, look, a fib will work on anything, right? So you can do fib levels on a monthly chart. You can do fib levels on a monthly chart. You can, see 38.2, 50%, 61.8. You can do them on a weekly chart. You can do them on a daily chart. You can do them on a 60-minute chart. Whatever your focus of attention is, a fib retracement, still the same methodology works regardless of time frame. So anytime that you do something on price itself, it doesn't matter what time frame that you use. However, keep in mind that the smaller the time frame, the more that you're going to see irregular patterns. You're going to see more noise because there's going to be fewer people taking both sides of that. What will be the strongest buy? The strongest buy with the fib retracement depends on confluence. Strongest buy with a fib retracement depends on confluence. So if I have something, and I'm going to have to kind of make this up here. If I have something where, perhaps there's some level of support that's down here that's really strong, and the price just dips down here, right? So we can almost draw this level of support that's over here. And if it pulls down to the fib level, so maybe this is the 38.2, but it also shares the same level as a horizontal price level as support, then that's going to be the most powerful one. And if it dips below there, that means that this thing is toast, right? So that's going to be your most important level. Anything that's shared with confluence. Sometimes it's a moving average, can help build confluence. I like to see horizontal price levels that share an important support or resistance level for that. So a fib just by itself means nothing. It's just a retracement level. So you don't you don't use a fib level as a primary trade trigger. Some people do. If you want to follow, something like Carolyn Borodin, like the fib queen, the Fibonacci queen, knock yourself out. Carolyn Borodin does that kind of stuff, right? She'll use a fib level as a primary entry point. I do not, because I believe more in price. I believe it's a fib retracement is just one of the tools that you use, but price by itself is the most important one. Okay. And if that doesn't make any sense, I'll have to do something more on that. Because again, just remember, fib level by itself does not signify a buy or sell point. Fib level by itself has not earned the right to be a buy or sell point in my way of thinking. There are others that will tell you that you can do it that way. If you believe them, knock yourself out. Right? So ultimately what you have to find, Annie, is you have to find a set of rules that you believe in, regardless of who originates them. And I can tell you what I do, but I'm not telling you that you have to do it that way. I'll just represent my way of thinking, but that it almost gets into religion, right? Because it's technical analysis. Yeah, what you have to understand and remember, think about this, right? What happened? What are the lessons that you guys could learn from the Malta conference? Let me just throw that out there, and you guys type in. I realize that I'm 20 seconds ahead of you here, and we have to probably wrap this up here in the next 4 minutes. So we'll make this the last point. So the question is, hey, what's going to happen in the future with Digitex? What's going to happen next week, or what's going to happen on the 15th with Digitex once the beta comes into play? So what's the future? Everybody wants to know the future, right? And I don't tend to think of technical analysis as predicting the future. It's more of giving a framework for myself to make decisions based on something happening, right? Because most of us get it the other way around. Most of us try to use technical analysis to justify their own biases. And that's where it gets dangerous, because you're like, hey, I'm bullish on XYZ, and what can I find to help me confirm my bias to be bullish on XYZ? And then that's confirmation bias. Usually you'll be wrong on something like that. So the more I do this, the more I avoid. You guys will see me physically stepping away from any discussion which is related to, hey, what does the future hold of coin XYZ? Because I don't know. I honestly do not know what it's going to do. All I can do is look at the chart and say, is it in a downtrend or is it in an uptrend? I can use my rules and say rule number 1 says that larger time frames dominate the trend. Okay, so how does the weekly chart play into that? Oh, it's a weekly downtrend, so therefore it's going to keep stepping on any kind of attempt to rally from this thing until it finally moves into an uptrend. But rule number 2 says that reversals start from the inside out, but it's got to actually reverse from the inside out and not just swing up. It's a big difference there, right? So that's what TA does. TA does not allow me to predict the future. I don't know what's going to happen on the 15th. How would I know something like that? But think about what happened in Malta. In Malta, everything was projected into that meeting going really well, right? Like Adam coming out and saying, boom, look at this. Isn't this the most awesome thing you said ever? And what happened? The market got thrown a curveball. So uncertainty came into the market. Uncertainty is always what makes prices go down. So will the 15th provide certainty or uncertainty? I don't know the answer to that question. And we'll have to see. But right now, what I would say is what's priced into the market is some sense of uncertainty, because it seems like every time they have a press release, it's like they're pulling back a little bit further because they're trying to do this right. So it totally makes sense for right now. Okay. All right. So guys, let me wrap up here. Yeah, touch the sky. If you want to send that to me, let me know. Let me know if you want to do that. And I think that's it for today. So again, guys, let's pull this back for a second. Get rid of those New Year's resolutions. Set up systems instead, and make sure that applies towards your trading as well too. And I think what you'll find is that it's going to make a huge difference in terms of how your results will go and your trades going forward in the new year. See you guys.